Hey everyone, welcome back. I'm Jeremy Szafron. All right, let's turn to precious metals because as we're on air right now, spot gold is holding firm above $4,200 an ounce, just shy of the $4,300 mark. And silver has surged past 53 to all-time highs, with spot prices still trading above futures in clear backwardation. Now, you might see today's weak economic data. The Philly survey, for instance, just came in at a shocking 12.8, negative 12.8. And this is just thinking maybe it's another flight to safety. But the real story here, the one that our audience knows to look for, is happening behind the price ticker. It's happening in the vaults, on airport runways, and inside the refineries. It's a story of a physical market at its breaking point. Now, when we last spoke with our guest back in February, the story was massive, unprecedented flows to gold, with gold to New York over tariff fears. And then when we spoke again in August, the strains were clearly building. Now, today, the story has done almost a complete 180. Now, we're witnessing a desperate global scramble to cover a historic squeeze in metals in London. Now, here to connect the dots is the man who has been at the front lines of this entire saga. Josh Phair, of course, is a founder and CEO of Scottsdale Mint. He's not an analyst watching the screen. He's an operator actually moving the metal, which is why we wanted his take more than ever. Josh, welcome back to the show. It's great to have you.
Yeah, thanks to be on again.
Now, listen, I went back and reviewed our tape. We talked to you twice this past year. You've been ridiculously accurate with what's going on, and it makes sense. I mean, you run a mint. When we spoke in February, you described a quote, big sucking sound of physical metals coming from the U.S., and now you're reporting on planes flying silver out. I mean, connect the dots for us. How did we get from that massive inflow to this desperate outflow in just 8 months? And is this both gold and silver? Is it just the silver squeeze we keep hearing about?
So it all started with gold, probably a little before Christmas last year is when it started. And like you said, I kind of broke it as I was seeing what was happening. And then suddenly all the import records, the Comex records reflected what I was saying and seeing. And, at the time, it really wasn't as much silver, but silver did pick up. And so we have a situation where people they're repatriating their metal. Their jurisdiction matters. And so a lot of that metal flow has been going to China and BRICS nations over the last couple years. And then once Trump kind of, won the election, we noticed, I'm going to go with merchant banking started to move metal in advance. And then really we're truly in a mineral war since then, a metal war that's taking place. So you're seeing strategic partnerships with Argentina. We bailed them out just the last couple of days. Why are we bailing them out? We need their minerals, their gold, their silver, their rare earth minerals. So we're in a battle of who controls the metal. And I would say that perhaps too much metal left London too fast. And that's where we're at today. And that's what we're seeing right now.
Okay, so I mean, if these repatriations accelerate, doesn't that actually worsen the squeeze in London, like you just said? I mean, you can't drain the vaults and still expect liquidity. Does this become a, self-feeding crisis?
100%. So you have a situation where London needs more silver. So, I always like to say assets go where they're treated best. So we saw early in the year, there was a premium to bring metal into the United States. Now we're seeing there's a premium to bring metal back to the UK. But a lot of people aren't wanting to give up their silver in particular because we're waiting on a final ruling from the US government regarding potential tariffs. Now, tariffs can come in two forms, import and export. So imagine you're a company who has the silver where you can make a nice arbitrage. You can ship it over to London, make good money, but what happens when you need to bring more metal back and it gets taxed? Mm-hmm. So this is where we're at. So they're offering a really juicy spread if you want to take it over there. So we saw it about Thursday of last week. Metal started boarding airplanes, and so that's not a cheap thing. Silver's traditionally they get put on a boat. Let's just say 4 or 5 weeks before it lands and is loaded up. But now with interest rates, on out of London on material, we've seen it as high as over 100% annualized. It's well back down again, down to about 10-ish% at the moment. But this is a traditional market where it's 1% to 2%, and so you've got bankers and trading houses. They're all trying to make arbs. But the question is if you're risk management, do you let your metal leave for London? So this is this is definitely interesting times.
Yeah. I mean, obviously it's on the U.S. radar too, as silver being drafted into that critical minerals list. We've already seen these steep tariff regimes kind of in place. I know you're waiting, but how real is the threat of restrictive tariffs on silver, especially refined bars or foreign imports? And how are you repositioning your arbitrage and kind of sourcing accordingly?
Yeah, so that is a problem that 2025 has brought every company in that we had never had these issues before. The reality is Trump moves at the speed of a tweet. He's every time you talk, the tariff risks come, they go. We just don't know. Now, I would say is if I'm a politician and I'm running the administration, you don't want to tax things that you need. So let's say PGMs, for example, the platinum group metals. You need silver. More roughly 80-ish% of our silver consumption in the U.S. is imported. So those are things. Now, where we could see in the future is export tariffs. So that will probably come, especially as things go on the critical mineral list. I think there are a lot of hidden hands all around the world who have been buying these assets, including what I would say, central bank through reported statistics. And then we know for sure there is OTC buying going on over the counter that's not being reported, both by the Chinese government, other BRICS nations, and perhaps even our own U.S. here. So I think we're definitely there's a battle for, who has the asset is going to win the energy race, the AI race, and the military race.
Yeah, it's just wild. And as you mentioned, it's going quick here, Josh. And of course, these demand pressures are certainly here. And we're seeing this weak economic data today fueling putting more fuel to the fire, it seems. From your vantage point, is this rally to over $4,200 gold and $53 silver just about the market pricing in the next Fed rate cut? Are you seeing evidence of something deeper here? I mean, you just mentioned some of these moves on the sovereign side being underreported. It seems like it's the perfect storm.
It sure is. I think anyone could look at the chart and say it looks overbought. But the reality is people have underexposure to this asset class. So I think central bankers, whether they're reporting it or not, they're buying it, knowing that they need to raise their level. So if they were at 0 to 1, 2%, these guys are wanting to double or triple how much gold they have on the balance sheets. And I think you just saw Merrill Lynch just a few days ago, the CIO. Morgan Stanley. CIO put out and said, there's a new portfolio we're recommending, a 60-20-20, 20% gold allocation. Most people don't even have a few percentage in gold. So I think people are misallocated to this asset class and people are going into it. Now, everything's at all-time highs. So the stock market, do you feel comfortable there? Roughly 30-ish% of the stock market are these AI companies. Is anyone really feeling comfortable that business is really even genuine and true? So I think we're facing a moment where capital doesn't know where to go. It doesn't want bonds. It doesn't want treasury bills. So it's going to a trustless system, which is gold. For sure.
Yeah, I wanted to get into the retail demand, obviously. But before we do that, I mean, you were talking a little bit about those BRICS nations, especially China, moving physical gold quietly without, showing it in their official reserve data. Bars seem to be leaving London and Switzerland, but they're not really reappearing in public reports. I mean, what's actually happening to that metal? Is it being recast, resmelted? Is it vaulted under different entities to avoid visibility? Any insight there?
Well, I'd say the insight that we have from China is what they report. So they're actually requiring or suggesting carefully that insurance companies start holding gold on their balance sheets. So you're seeing institutions in China hold, and then we've all seen the videos in China at these malls where they're selling gold. It looks like the old Black Fridays that used to happen outside of a Best Buy. So people are just rushing in and buying gold. Well, now it's happening also with silver. So you've got, as the price goes higher, a lot of the population of the world is starting to look at silver more as a precious metal and not just a commodity. So I think it's really attracting things. And that's now, I think when I was on your show last, we were talking about how really the buying is at the institutional level. It's in both gold and silver. The retail has been selling. They've been getting rid of their metal. And it's been going into the bankers' hands. And I said, if we have a situation where governments and banks and also industrials and or retail step up, and everyone's clamoring for the same time, we're going to see explosive things. And that's what we're seeing now. Retail, I think I reported it on Monday. It woke up a little bit last week, but I said clearly just this week, I would say the retail buying now that's coming in, and it's worldwide. We're seeing it from our wholesalers all over the world, is they're just clamoring for the metal right now.
Yeah, it's interesting. I mean, you mentioned that institutional side, and obviously World Gold Council, central banks are still continuing their buying spree, and they don't seem to be price sensitive. Talking about that retail side, I mean, I read that recent post that you said retail has awoken. Is this the force multiplier you were concerned about? I mean, what's different about the buyers we're seeing now?
You know, everyone wants proof. So if you said gold would be 4,000, let's say even just a few years ago, you'd say you're a crazy guy. Now, when you say gold is going to go to 10,000, that sounds crazy. We're going to start to see banks are going to start lifting their projections. So as they start going, you're going to see projections in potentially triple digits for silver. This is a required element that's needed for hybrid cars, for electronics, for solar, for military functions, for computer chips. So if industry needs it, and governments, we've talked about Russia, we've talked about Saudi Arabia, they might be buying physical silver as well and put it on their balance sheets. So now you're in a situation where governments are stepping in on a monetary perspective. And now if the U.S. truly puts silver on the critical mineral list, it's on the recommended for critical right now.
Yeah.
That means it's going to start building stockpiles, which it had, again, we had, the U.S. had stockpiles running till just after around 2000, it got rid of it for military purposes. So if you suddenly have all these hands buying some things at the exact same time, this is just simple supply demand.
Yeah. And I mean, then I guess you could get into the mechanics of that demand because it's creating those unprecedented situations. I mean, you broke the story that lit up the industry. You were reporting that those planes loaded with 1,000-ounce silver bars were being flown to the U.S. or from the U.S. to London. And in February, you were talking about how difficult it was finding planes to fly gold in. I mean, put it into perspective for us. How desperate does the situation have to be to fly silver across the Atlantic?
Yeah, so silver is extremely competitive. So really tight margins typically. Mm-hmm. So a bank, a trading house, they're trying to make pennies an ounce. So to put something on an airplane, to give you an idea, an airplane you can get around 300,000 ounces on a standard flight out to, let's say, from New York to London. That's going to cost right around $75,000 right now. So you can imagine that arbitrage spread has to be big enough, plus your finance cost and everything that goes into it to make it worthwhile. So normally that's just going to go on a boat. And it's going to cost a few cents. So we're in a situation where when they are scrambling jets to do it, that's pretty interesting. That is the norm of how gold is always flown. And what we saw basically around Christmas time last year, all the way through February, is almost every single commercial flight that had what's called a high security waiver. So these airlines, each airline will have waivers that they'll be able to put on potentially many 3 or more tons of gold on it, which I'll let your people do the math. So when every single commercial flight was taken, with gold, that was pretty amazing. So there's no doubt we're in a metal war, and that means securing it both above ground and also below ground.
Yeah, and that desperation is what it looks like, creating a massive price difference of what traders, of course, call backwardation. For our audience, because you understand this, break down why a physical bar in London is suddenly worth, according to some reports, up to $3 more than a futures contract for a bar in New York. I mean, what does that signal about the health of the physical market?
It tells you that they're short. They don't have enough over there. For the same reason that, we've seen some of these ARBs go to China in years past too. So suddenly metal is moved over to where it's ever treated best. So they will outbid, we have a global pricing system between all the exchanges and the markets, but if someone wants it more, they're willing to go above. So they pay a premium. So here in the US, we call that an exchange for physical price. So while most of the paper trading you see, that's not for the real metal. You want the real deal, you got to pay up for it. And that's exactly what we're seeing.
Yeah, and I got to ask you too about this topic. I mean, it's obviously having a huge impact on borrowing costs. Back in February when we had you on, you told us lease rates hitting 10% was a big deal. Now we're hearing credible reports, including from the Japan Bullion Market Association, of 1 month silver lease rates hitting 39.2%. I mean, Josh, is that a squeeze or is that a panic?
Both. It's also a shakeout. It's a shakeout. It basically, a lot of these companies, they floor plan their whole operation with a bank. And so if you're not really a cash buyer of these materials, let's say you're a refinery, and so all that scrap comes in, you're paying cash to your customers right away, and that starts to add up, and it goes through the refining process, which could take a month or more. Well, right now the backlog in the United States is anywhere between 2 to 4+ months for gold and silver. So you cannot finance that very quickly. So now some of these places where the interest rates are going higher, they're just saying we can't even take the metal. So a lot of the industry right now is frozen. Now we have seen just this morning rates are really dialing back down again. So a lot of this can fix itself in maybe a week. It could even be fixed by next week. Now, that doesn't mean the chaos is over. That doesn't mean the price is going to go down. We're just in, it's day to day right now that things are shifting.
Yeah, I was reading too, and you were talking a little bit about how industrial users are facing financing costs as high as 85%. I mean, what are you hearing from your contacts? Are production lines for major industries at risk of shutting down because they can't simply get enough physical metal?
Yeah, I would say some of them are at least on pause. So they're basically they're on pause. Now, a lot of us in the industry, while you might have a lease facility somewhere, that you're more of a cash company. So meaning you've got the assets to keep your business going. So it just might mean that for some companies that they're not able to have that extra capacity to be able to do it until you turn. I mean, precious metals. If you start doing the math on it, gold and silver are so high now. Every ounce. I see these invoices both on what we're buying and what we're selling, and just keeping it flowing. It is some serious capital that's moving. So, the bankers are doing very well right now. Let's say that.
Yeah, I mean, with lease rates at these levels and the industrials getting squeezed out, does this, expose kind of a fundamental flaw in the fractional reserve bullion banking system? I mean, is the core assumption that not everyone will demand physical delivery at once finally breaking down?
You could potentially say that. Yes, I think, and that's why assets are moving. So, possession is 9/10 of the law. So you're seeing nation states are actually saying, hey, I want my metal out of that pool. So, let's put it in my vaulting facility. Let's have it audited. I want to put eyes on it. So that's what's happening. And so if there were potentially some groups somewhere in the world that were like rehypothecating additional assets, and I don't know if that has been taking place, but let's just say just even the threat of that is taking place. That's what we're seeing. We're seeing jurisdictional risk. The UK is not part of the EU. The EU and the UK are not really getting along with the Trump administration. So Trump's saying, hey, let's send the metal back to the US. So I think no one wants to have boots on the ground with a kinetic war. I realize we have a little peace in the Middle East, at least for a moment here. But what's going to happen with Russia? What's going to happen with Ukraine situation? No one wants all their assets in a place, and that's not to mention that there's insurance risk in these centers. So the value of metals are rising so much gold is there that they're facing aggregate insurance limits that are completely blown.
I got to ask you, because you've been ahead of the curve on these supply chain issues. In February, you mentioned that 2 to 3 month refinery backlog. Now you're reporting 4 to 6 month backlog and highlighting that only 2 LBMA Comex accredited silver refineries in the U.S. are Japanese owned. How critical is this refining bottleneck to the global supply chain, and I guess the ability to respond to crises like the one in London?
It is big, and I think even though they are in the U.S. and they are Japanese owned, so thankfully Japan and the United States are very, very integrated. I mean, you've seen the deal with Nippon Steel, with the purchase of U.S. steel. Essentially, the United States has a seat at the table, so they're very much controlling it, and that's why I'm looking at the entire metals industry is so critical, so strategic to the U.S. government and frankly survival and thrival for where we're heading. What's taking place with the negotiation of critical rare earth is a place that you would say, well, how did we get here? How did we get to this state? So we're not in globalism, so people are not trading friendly anymore, and this is a situation where people are making pretty dramatic moves. And my facility, we talked about the tariff risk, so we just were formally activated just 2 weeks ago as a foreign trade zone. So my facility, I'm able to bring in and fly metals in that may have tariff, and it could be held without tariffs. It could be manufactured, shipped back out, essentially as a free port. So every industry should be looking at their trade relationships, looking at their partnerships, and how to really just strengthen the backbone of where we're headed in the world.
I got to ask you, I don't know if you have any insight on this, but what does that backlog that we were talking about mean for miners? If a mining company produces a doré bar, but the refiner won't take it for 6 months, what happens?
So usually there's a bank in the middle. So the banks are typically, they're buying the metal. They'll buy maybe let's say about 90% of what the basic assay is. So if they know how much material is coming in, they'll do a prepayment and then they do a settlement. So the bank's just going to have to refactor that rate, and basically charge the mining company. And then if it's going to take a longer process, but the bank's also making money. So then they have the right they now own the metal. So as it's refined, then they're catching the VIG as they deliver it into the exchanges as well, or they sell it off to an industrial company such as myself. So that movement in the middle is very interesting. And I mentioned the term merchant banking. And so when nations maybe aren't trading between each other, a bank can step in and buy that material from, let's say, that particular Latin American country. It can be refined in another country and then shipped to another government or another nation. So I think merchant banking is going to make a huge resurgence in the metal space.
That's interesting. I got to ask you, it seems like it's not just at a wholesale level. We're seeing reports today. This is from Bloomberg. We were just seeing that Japan's largest retailer, Tanaka, has completely suspended sales of small gold bars due to frenzied buying, is what they call it. Is this the kind of retail level supply shock you've been warning about? Are you seeing similar strains in your own order books?
Yeah, I had a large institutional customer that does have retail in another country. They called one of our traders yesterday and says, "What do you have readily available? We will take all of it." Now, the reality is we can't do that. We have other customers to serve, and we're continuously producing. But that's what's happening in the world. There it is a supply shock, and it is also a situation where there's so much has been sold. As silver has gone, into the 30s, into the 40s, and now 50s, so many customers sold out. Well, that's starting to wane, and now people are wanting to buy again. It's a kind of a new class of buyers. So, retail ready product, it takes time to move the material, to melt it, produce it, make it look pretty, package it, get it out the door, insure it. So there's no doubt that facilities like mine are getting quite busy.
Yeah, let's talk about that last line of defense. The narrative on Comex is kind of flipped. In February, it was the world's fortress for gold. Now it's being viewed as a potential source to kind of relieve London, right? As someone who takes physical delivery, how should our audience interpret the registered versus eligible stockpiles? According to the latest CME data, the total stocks are around 512 million ounces. But is that the real number to watch?
Yes and no. So that's the metal that's on the exchange, and then there's also quite a bit of metal in other vaults that are trading more. I call it over the counter, meaning it's short term usage. So as metal is coming, let's say from Mexico, it's coming from Peru, it's coming from Europe. As that metal is coming in, it's really meant to be either sold at a slightly higher premium to a user, and if it can't be sold to a user, then it goes into the Comex. So think of it like the Comex is like where it goes last in a normal market. So when the Comex needs more metal, like we've seen early in the year, they were soaking it all up. So I would say, the Comex has quite a bit of silver. From everything that I am seeing through myself and trade partners, there's quite a bit of metal here in the United States. So we feel very good about our supply lines at the moment, that things are flowing and won't have an issue. Europe, however, is feeling much different. So that's where it's at. So I think as we look at the larger depositories in larger exchanges such as the Comex, such as the LBMA, we kind of look at how much metal is out there and we should keep an eye on this on a weekly or a monthly basis to see where is metal flowing in and out of.
I got to ask you on merchant banks, just going back to it, because I find it interesting you've been accurate since February, so I'm going to clearly start watching these merchant banks. I mean, they're financing and redirecting refining capacity across borders. Isn't that effectively nationalizing the trade routes? I mean, in other words, China or a BRICS member can decide where the metal gets refined and who gets cut off just by controlling the merchant flow. How much leverage does that give them right now?
It's big. I mean, and really when I started seeing this form was when, call it the West seized Russian assets, when the Ukraine war broke out. So when they not only seized assets, they seized deposit in banks, they seized everything. So, I think what the BRICS countries are literally doing with gold is they're building vaults in these various nations, and gold is being spread out across those vaults, and they're going to provide a settlement layer. So why you may not trade with and trust China fully, but do you trust the gold? Do you trust the things that are back behind it? So they're literally creating a system to try to compete with the US dollar. Now, that doesn't mean it's going to be a currency in the same form that the US dollar is, but think of it just more as a strengthening their trade bond between each nation. So when that's going on, this is something that is really driving, where is the metal flowing and moving to? So that's definitely what I'm watching. So I look at it like if we hit a kinetic war, Jeremy, are we allowed to trade with these nations? And so we're going to see, to me, a bifurcated trade. There's going to be two worlds. Think Axis and allies. So, a situation where you might not be able to do trade with those industries. I mean, right now, I only know of one U.S. company that can trade gold and silver in and out of mainland China right now. So imagine if that one goes away. And then there's a few other banks. So right now, we're still trading as well as we can. But let's read the tea leaves here. Trump is trying to tell people to look elsewhere. And he's doing that through tariffs. He's doing that through tariffs. So now Hong Kong assets are now being viewed just like mainland China assets. So they're now being tariffed when they come to the United States. So Hong Kong is now shifting more to the BRICS nations than it is the United States. So this is not going to end. And this is why this is kind of the grand thesis that I started to see early during COVID shutdowns, the printing of money, the dilution of the U.S. debt. And then watching what was happening with the U.S. Not the U.S., but the Ukraine-Russia war, which is really just a proxy. So, once you start seeing all this, you get a vision at the macro level, and you just want to own the assets and position your company or your family's wealth or whatever you're at to just have the wind blow you in the right direction.
Yeah, I wonder, because if BRICS vaults keep growing and Western institutions can't freely trade or clear metal with them, I mean, that bifurcated global market you're talking about, if the two systems can't cross-trade, I mean, if metal can't flow back and forth, then spot and future prices lose their anchor. No, I mean, you've got one price for deliverable metal in Dubai or Shanghai and another for London and New York. Are we already seeing that split start to happen?
It's a challenge, and this actually started with a tweet from Trump in December. You could look it up. He hadn't even taken office yet. And he said, you better not create a competitor to the US dollar and you better not back it. And he said that to the BRICS nations. And a lot of people, that went over everyone's head. Back it with what? So there is no doubt that a situation is arising. And I'm not saying we're fully there yet, but you see the road, you see the path of where we're headed. It is definitely going to suggest, and I think we're seeing it already, where the clamping down of price points is changing. So if there's more buyers clamoring, whether it's from one side or another side, it's affecting the global price. And so this is where I think we're starting to see more, some people may call it free gold. It's more of a free market price point. And so where should gold really be at this point? And that's going to be something for us to watch in the coming years. I think people's minds will be blown of where this could potentially be.
Yeah, and of course we got China, right? I mean, we're seeing Treasury Secretary Bessent trying to form a coalition to respond to China's new export controls on rare earths. You've called this the metal wars. I mean, how does China's role as both a massive consumer and a strategic accumulator of metals fit into this physical squeeze that we're seeing?
China did a wonderful job over the last decade or more of locking up a lot of the assets in Africa in particular. So U.S. has kind of been asleep at the wheel when it comes to a lot of these resources. So it is playing, I would say, rapid catch up, though. I've been very impressed with the Trump administration as it relates to minerals, that they are moving. I think you're going to see a lot more in the coming weeks and months ahead about to make sure that they lock down those supply lines. So I say the focus for the United States is going to be the Western Hemisphere. So North and South America is I think really what the United States is making sure it locks down.
It's interesting because some obviously would argue that China's facing its own economic headwinds, right? I mean, I'm wondering if this massive buying might be a sign of internal weakness, a kind of an attempt to shore up confidence rather than external strength. And could the Shanghai Gold Exchange, with its own physical stockpiles, act as a release valve for London if the price is right? Or is China a one-way street for the physical market?
Well, I guess you would have to ask them, do they care about London or not?
Yeah.
So, I also made a comment. It's kind of like if you watch the some of the famous drug cartel movies. They always say, you don't want to kill your customer. So right now, I think in the world, like London's being squeezed. So you don't want to kill London today. You might just want to squeeze them again. So, I probably don't see a short-term end game, but I think long-term, there's no doubt that China is trying to attempt to control the world's trade as it relates to metals. And I think had a different president won, I don't know if the U.S. would have retained its gold. And my personal, I realize it's not reported yet. My personal take is that it is that the reshoring its gold, and perhaps because it does not want to lose status. And I think we're all gonna find out just how important gold is to the financial system as we go forward.
Well, you've been ahead of it, my friend. You've been ahead of this story. And just on a personal note, I mean, you ever see anything like this before? I mean, if you're looking at the next 6 months, what are the top 2 or 3 indicators you're kind of watching that'll tell you if this physical squeeze is getting worse?
Well, I appreciate that, because sometimes, I've had a lot of these theses for quite a while. Yeah. I would say I did corporate risk management in my 20s for mining companies. And so I've seen the mining side, and I'd say guys like Jim Sinclair, who's now, a few years ago he passed, were just icons in the precious metals industry. And I used to fly around to meet with them, to speak with them. And, a lot of the old guard is gone. And I kind of wish they were here to see what's taking place. So as I see the thesis at a macro level, you see where everything's going. And so price is now an indicator. So now I have people like, Josh, you were right. Gold's at 4,000. You were right back when it was even 1,000 or 2,000, and now they're like, but it can't keep going. And I'm like, you don't even want to know the number, of where we're probably headed. We also have to realize governments are debasing their currency every single month. So that, they're printing more and more and more. So people say it can't go higher. Well, I think the reality is, we even heard from Elon Musk, who said he found 3 extra money printers inside the U.S. government. That wasn't really covered. Now, that means that there were departments in the U.S. government that were issuing currency that was not reported. Well, was it $1 million or was it $1 trillion? We don't know. So this is a situation where people don't want to trust each other. They are now turning to a hard asset. And this is exactly what's taking place in the world. So I think we watched the price and we just put it all, I would say a lot of the nonsense in the world. It feels also like a great diversion of what's coming. There is huge monetary pressure. Some might say we need a monetary reset. And so I think as we just kind of watch and we storyboard, we keep moving the chess pieces around of what could happen.
Yeah, I got to ask you, I mean, what's that number? I don't know if you can tell me, but I mean, what do you think? How far is this going? If no correction makes people a little jittery at this point.
Well, I'm gonna put my name attached to it because I don't really see a lot of people talking about it. So I'm gonna call it the Phair Sinclair ratio. And and so a lot of people don't know the story, but in the early 70s, Jim Sinclair was one of the larger precious metals trader in the world, and he said, gold was like 150. Hey, gold's going to go to 900 by the end of the decade. It hit 887.50. The very next day, he sold out and said, hey, it hit my number within $12.50. He was on the cover of Fortune magazine, dubbed Mr. Gold. He went away. Well, by the way, he was hired by Volcker to liquidate the Hunt Brothers silver position, by the way. So he was really, really well respected. 9/11 hits. He sees the U.S. government start to print money and spend money. Gold is now in the 200s. He says gold's going to go to 1,650. And they said, Jim, you're crazy. He was on CNBC and Bloomberg. Everyone said, you're an idiot. He goes, you guys forget my ratio. You take the foreign debt of the reserve currency of the nation, its stated gold holdings, and at what price does it need to be to balance? So it hit again in 2011, 10 years later, it hit just past 1650. We got to about 1800. So if we take that same ratio, so I'm in my mid 40s, it's hit it twice in my lifetime. If you take the foreign debt of the United States, not domestic debt, but foreign debt, to stated gold holdings, that number is over 30,000.
Wow.
We're going to see.
We're going to see. Well, I'm going to leave the audience with that one. We haven't had the 30,000 call, but I mean, obviously, we weren't expecting it to climb this quick, this fast as well. I got to ask you, for the people watching at home that haven't really touched the market, I mean, what's the single most important message for those investors watching today who's trying to protect their wealth through what you've called this explosive decade ahead?
It's going to be volatile. It will be volatile both ways. And I would say for those that feel like you're missing out waiting for a pullback, it could come, it might not come. I don't know either. So I think that's a situation where people are establishing a position, they're getting in, they're looking at their portfolios and reallocating. And I would say if the world is reallocating its assets, you want to be on the earlier side. I still think if this is baseball, we're probably in the third, fourth inning right now. I'd say my target is right around 2030. So it's another decade from when, again, COVID lockdowns was the moment the U.S. government started, issuing insane money supply. So, it could it happen 2 years before or 2 years after? That's kind of the sweet spot. So I think we got a long way to go. This is not an overnight. Don't be emotional about what's happening. It's more just use your gut, your gut feelings, and we'll see what happens.
Hey, what in your view, if we hit that 30,000, would have to happen physically in supply, delivery, confidence for gold to reach that level?
Well, it's already hit it twice in my lifetime. Why couldn't it do it again? We did it before. And I would also say, that's why I say this price isn't now. We're not even in frenzy mode. Retail just started to pick up days ago. Whereas I look back at, I was very young. I was in diapers in 1980. But if we look at the 2011 peak, that was speculative trading. It was insane. When we got up to nearly $50 on silver and gold 1,800. So it was very speculative driven at the end. We haven't seen that yet. This is more of a physical demand market. I call it the hidden hand. Institutions, governments are the ones buying, and retail is just now awakening here. So I think we got a number of years to go. So we can totally see this get a lot more wild. This is like been the wake up. This is just the wake up moment.
Yeah, and for people that are looking at these gold prices here going, okay, I missed this $2,000. I can't buy it at $2. It's at 43 now. Are they buying silver instead?
It depends on, gold to silver ratios. I think I'm a really big fan of both metals. My company has been involved. Oftentimes gold typically is slow and steady in comparison. Silver's the wild ride. It's more volatile both ways. So I think it depends on your asset class, how much you're deploying. Usually the higher you go, you start to layer in a much larger ratio of gold. So it kind of just depends where you are in life, what your outlook is. There's great opportunity with both of them.
All right, physical market is waking up. I'm going to use that. From a rush to the U.S. vaults, it seems like pretty desperate here. I mean, the physical market seems like it's in a little bit of turmoil. So I appreciate you coming on from the front lines of what you call the metal wars. Josh, of course, Josh, the CEO of Scottsdale Mint, joining us now.
Great. Thank you.
Appreciate it. We'll talk to you soon. And come back and make sure you WhatsApp me something going on the retail side. Give us a scoop. We'll have you back on.
Will do.
Cheers, Josh. All right, the markets are rewriting the rules in real time, it seems. We'll keep tracking the story every step of the way. For Kitco News, I'm Jeremy Szafron. Hit subscribe and stay with us for real analysis, not noise.